In this particular segment, I thought we could go right to the phones and visit with Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri. And of course, that is a location where I'm anxious to visit with Brian about what's going on here with all the heavy rain and flooding conditions. It sounds like you're kind of in ground zero here this week, Brian.
Yeah, it's a good thing we're not real close to a lot of this area, so it's not so bad where our office is. So it's all good. We're out of the danger zone.
Okay, so it sounds like most of it probably is more north and east of you then.
Yeah, you gotta go down into some of the Ozark areas where a little farther south and east, like you say, that's where a lot of the damage was occurring. And where I'm at, not so much, not really any major problems. A little bit of flooding, but nothing major or nothing real serious.
Well, we're glad you're able to sidestep that for the time being. I know you and I were talking briefly before we came on the air live here, and you have kind of been monitoring some things that have been coming out of this Kansas wheat quality tour this morning. And I think you've been in communication maybe with a couple of folks. What are you hearing so far in the early stages? I know they just got off and running here this morning.
Yeah, it really depends on what locations they're looking at. In McCook, Nebraska, they had 14 inches of snow in some fields, and they have at least half the crop has been damaged by that snow and freezing temperatures. So there's some areas that are certainly going to see some damage. I think where the snow came, really cold temperatures, they're going to have a lot of damage. Of course, if that wheat is not headed or jointed, it may not be as severe. If they did not get the snow, just had some rain, they're looking at some big crops. And it really gets down to where you're located and what type of weather you had. And it's going to take several weeks to determine really how much damage has been caused by last weekend's rain and snow events.
Well, on the corn market this morning, we've been struggling here, trying to keep up with unchange. It looks like we're a little weaker on the day. Let's go to the corn board right now and look at last prices. These are live from Chicago. So right now on the July corn, we're still down 3 at 374.5. December down 3 at 391.5. Soybeans have been going the other way, and we have July soybeans currently 2.5 higher at 972 3/4. November 3 1/4 higher at 967 3/4. What do you think of these numbers here today and the way the market's acting after the latest planting progress report?
Yeah, not a major surprises in the report. We're not falling too far behind. A lot of clients in the western part of the Corn Belt that did not get heavy rain say if they can avoid rains tomorrow, they're going to be back in the field by the weekend and going back and trying to get some crop in the ground. And with this drier forecast, that's going to produce a little bit of pressure against prices, I'm afraid. We've had a lot of old crops selling in the corn market, specifically yesterday on the big rally. We've seen that reflected in today's prices, down about 3 cents across the board.
Okay, on the wheat market right now in Chicago wheat, let's look at July rather, and it's now 3 1/4 higher at 459 1/4. And Kansas City on the July contract now trading 5 3/4 higher at 471 1/2, still adding premium in there. And looking at Minneapolis wheat, we have July currently trading at 567. That would be up 4 1/4 cents on the day. The nearby is leading the way up on the Minneapolis wheat there. On the cotton market at the present time, we have July now trading at 78.68. That would be down 27 points, kind of where it's been floating around most of the day. December new crop cotton down 8 points. Brian, I'll bring you back here in a moment, and we'll talk about the latest developments in the livestock trade when we come back. We're talking with Brian Hoops. Don't go anywhere. I was glad to talk with Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri. I want to talk now about what's going on in our livestock trade. So let's go back to the phones. And Brian, thank you for joining us for that. We had some cash cattle trade last week that I believe went up about, $5 to $7 or thereabouts. And it seems like they must have something in the air today, something in the wind that is making the futures drift higher here. Last time we checked, we had live cattle going limit up on that nearby contract. Let's take a look right now and see if it's remaining at those lofty levels here. On the live cattle board, let's check in with the nearest contract here. June, now 127.12. Yep, sure enough, it is still limit limit up. So it just touched it a half hour ago when we checked in. Still there, August up 274 to 122.92. On the feeder cattle side, let's take a look there real quickly if we can. We have the May $4.50 higher. So yeah, we could definitely tell something was changing on the last half hour. So we have May, August, and September now all limit up. August now $4.50 higher at 158.25. So something is going on this morning. And Brian, I don't know. Most folks say they don't expect to see any cash cattle trade till the Fed cattle exchange comes up tomorrow. Do you think that'll be different this week?
No, I don't look for any cash trade to develop today. It'll likely occur tomorrow. We had written in our newsletter that the cash trade yesterday was expected to come in a little bit lower because of declining packer margins. They have lost a lot of their margin with the sharply higher cash trade, and they were in the red. But last night's cutout values showed a big jump in the choice, and that has kind of fueled optimism again that we're going to see higher cash trade this week. Cattle futures, when they opened, they kind of established a higher trading range. And then after that opening range, we broke above it, and that ran a lot of buy stops. And I think the combination of those buy stops, higher cutout values, and expectations for stronger cash trade has fueled this limit up conditions this morning.
So does this put us now into new contract highs yet again here on the cattle complex?
Yeah, once again, we are at new contract highs, live and feeder cattle. You know, they always say a bull market makes contract highs. It's never bearish when you're hitting these highs. So, again, we've reiterated to clients, if you need to be hedged, you don't want to do it in the futures markets. If you want to have some protection, do minimum value put options. That'll give you upside potential because you just don't know where this market's going to top at, and you don't want to try and step in front of this bull market.
So do you think the large funds are still net long or holding huge net long positions, or do you think they've backed out of some of them anyway?
Well, they may have backed out a week or two ago, but, you know, looking at the Commitment Traders report, they've been building these net longs since early March and just have steadily increased it as well as open interest increasing. That's all fund buying. We continue to expect the market trying to rally until we get into parity with the cash markets, or at least narrow that basis between the cash trade and where June futures are at.
All right, let's take a look at the lean hog trade then and see what the current futures trade is doing. They were trying to follow the cattle market higher here this morning, and right now they're firmer anyway. We have May lean hogs up 70 cents at 66.82. We have the June up 87. Last trade 74.15. So we're within a dime of our high of the day. We have July up 74 at 75.62. Are you as optimistic on the lean hog trade as what you were on the cattle there?
We haven't been very optimistic in the hog market, but we have noticed the Commitment to Traders report, which was real bearish through most of February and March, has changed to more of a bullish stance now. And so it tells us that we should be expecting some sort of a rally in this hog market. We've had a real nice rally from the $68 area up to $74. We're getting some spillover strength from the cattle market and some seasonal strength into middle of May before prices start to turn back lower. So we think maybe the market could continue to retrace back some of the losses that it had from earlier this winter.
Brian, good stuff. Thanks for visiting with us today. Appreciate the insight into the markets. Brian Hoops, the president of Midwest Market Solutions. He is based in Springfield, Missouri, and active markets today. Limit up cattle.
Wow.
Again, now we're adding the feeder cattle to the market complex. They're going limit up. So that's about 4 contracts now.
Very good. Thank you, Marla. That's why we're here. We'll keep track of that as well.